Welcome back. You're watching ED Insight. Financial inclusion or access to financial products and services by the poor is a grand idea. An idea that MFIs have delivered on by bringing in more than 23 million underprivileged people into the financial system. But with the RBI clipping the wings of MFIs, the big question now is who will lend money to the poor? The RBI is pushing banks to drive financial inclusion, but is it the best solution for the poor and banks? Swati D'Souza finds out.
Just 99 out of every 1,000 Indians have access to credit from banks, and 4 out of every 10 Indians have no bank accounts. The point is obvious. There's a crying need to include more people in India's massive financial system.
How do we ensure that they are not financially excluded? That the mainstream institutions and the MFI, NBFCs, I hope, will become more and more of that, are able to embrace this class of people and provide to them the range of financial services which they need.
The RBI is doing all it can to push the cause. It already has a 10% mandatory target for banks to lend to weaker sections of the society. But banks hardly come even close to meeting these targets.
Banks have to, for example, give 5% of the total outstanding portfolio to women. They never meet those targets. None of these targets of financial inclusion and broader inclusive growth are met by any of the formal sets of institutions.
Indeed, but that has not stopped the RBI from making the financial inclusion agenda even bigger. This year, the regulator has made it mandatory for banks to open at least 25% of their new branches in unbanked centers. It has relaxed Know Your Client or KYC regulations for opening rural bank accounts and is working at ensuring that 74,000 villages with a population of more than 2,000 people have at least one banking outlet by March 2012. A banking outlet includes branches, business correspondence or non-branch banking using technology and other alternative banking solutions like mobile vans. At the end of June this year, about 1 lakh villages had banking outlets with nearly 8 crore no-frills savings account and deposits of about 6,000 crore rupees.
Commitment made was that, all the habitations more than 2,000 population will be covered by March 2012. So we have a roadmap for it.
But all this is not nearly enough. A survey of bank expansions in UP, Delhi, Rajasthan and Tamil Nadu by Microfinance India reveals that each transaction in a no-frills account costs 13.4 rupees. The one-time cost of opening it is about 50 rupees and it costs 5 times as much to maintain it over a year. But just 20% people use these accounts for savings, which means that banks can hardly run profitable businesses in rural India. The RBI realizes that the costs the banking sector has to bear to deliver services to the poor are high, and it's been pushing for the use of information technology. But banks can't replace MFIs. Well, not just yet, because MFIs have been able to deliver financial services in a profitable manner.
I think it's a sector which is serving the needs of the underbanked, the urban and the rural poor. I think these are organizations which have proven to be very nimble, very flexible. They have built business models which possibly our banks and larger NBFCs have not been able to adapt to.
Which means that banks are in no position to compete with MFIs on delivery of microcredit. Instead, they are better off riding on the sector's success.
They should really be seen as complements of banks and insurance companies, providing the real last mile reach. And that would always be needed because, for large institutions, whether they are banks or insurance companies or mutual funds, it's not possible for them to cater to the millions of financially excluded people the way an MFI can.
Which is why it is important to give the MFI sector a new lease on life. Shutting down MFIs in Andhra Pradesh has deprived poor customers of more than 4,000 crore rupees in annual credit. With banks not quite making up this shortfall, such poor borrowers are once again getting driven into the arms of moneylenders, who charge interest rates even higher than the MFIs. For now, it seems in trying to regulate the microfinance industry, the Andhra Pradesh government may have thrown away the baby with the bathwater.
Well, that's all in this edition of ET Insight. We'll be back next week. Until then, don't forget to write in with your feedback and suggestions. Thanks so much for watching.